So we've got some really bullish news on Uber stock, which as you probably saw a few weeks back, I actually have been a fan of. We've got some bad news as well, potentially. So we'll go over all of that and see how this could affect Uber. So we actually have an analyst from Bank of America that thinks Uber could really benefit from the big, beautiful bill that just got passed by the Trump administration.
Bank of America upping its price target on Uber today, not just on strong bookings growth, but also on a potential pay bump for drivers, thanks to the no tax on tips provision in the president's mega bill. Justin Post is B of A's internet analyst. Justin, I love, as the dust settles, figuring out how to connect some of these dots. So what do you expect to happen for Uber here? Welcome.
Sure. Great. Thanks for having me. So basically, it's a pay bump for drivers. We think driver earnings on Uber could increase by about $1 billion by not having to pay taxes on their earnings. So in effect, it could add to some driver supply and make Uber's operations a little bit better. So net, it's a benefit for drivers and also for Uber's network.
Do you think it will affect the way that people pay their drivers? Will there be any kind of games of sort of like, maybe Uber cuts prices, but then you tip a little bit more, stuff like that, or no?
Yeah, I think Uber's probably going to let this just pass through to drivers and be a nice benefit for them. I don't think they'll try to cut driver pay or anything like that, but it will make the job more attractive, and that certainly can improve driver supply conditions and make the service levels better. And I think that's how they would view this opportunity.
I have to imagine the same would be true if these portable benefits gain momentum, as Emily was just detailing, right? I mean, that would also make people, I assume, more likely to want to do the job. Or the gig?
Certainly. Uber has signed agreements in several states for independent contractor benefits. And I think they would really like the certainty of this legislation. And certainly it would make the job more attractive for people and kind of get a regulatory overhang further removed. It's already been partially removed in the stock, but further removed and really drive some certainty in driver pay and certainly make the job more attractive for some drivers.
Yeah, you think?
So you can see straight from Bank of America that they are increasing the price target on Uber, which has already had a monster year. If you look at how Uber has actually been doing this year, I mean, year to date, they're up 53.41%, vastly outdoing the S&P 500. Many companies have been struggling with the uncertainty of this year, but they've been doing really well despite all the crazy market conditions. So adding this news today is really bullish on Uber, because I was already pretty bullish on Uber even before this. Obviously, none of this is financial advice. This is just kind of what Bank of America is saying right now, and we'll go over some numbers here in a second. But we do have some more news on Uber as well. Bloomberg actually just came out with this article talking about how Canadian Uber drivers join a union seeking their first collective deal. So they were actually trying to get higher pay for Uber in Canada. Now, obviously, this big, beautiful bill that the Trump administration passed is for the U.S. So it's making it better for the U.S., which is where Uber is based and where they started, but they have branched out to other countries like Canada. And this may be possibly a concern for Uber. But again, this actually came out before this news of how Bank of America analysts are upping the price target. Now, I did find someone who actually posted kind of a summary of this, because obviously Bloomberg wants you to pay for that article, but they said basically drivers for Uber Inc. in Canada joined a union in an effort to negotiate what they said would be the country's first collective agreement for rideshare drivers. So they are trying to obviously organize, and they are trying to focus on core issues, including greater transparency around trip rates and earnings, improved health and safety, and fair processes for account deactivations. Now, when that news came out, this was a couple days ago, it didn't seem to have much of a major hit to Uber's stock price. And if you look at how many different countries Uber operates in, they are around, if you look at how many countries Uber operates in, they're in more than 15,000 different cities and dozens of countries all around the world. Now, one more thing we might want to touch on with Uber that could potentially be bad news is the downward trend in travel. So this may negate some of the positives of the increased price target from Bank of America, as well as just the news of how not having to pay taxes on tips could benefit and attract more Uber drivers. Well, the thing is, if you look at international travel, which is also a source of customers for rideshare services like Uber and Lyft, the trend is going downward in the United States in terms of international travel to the United States because of the mass crackdown on immigration, and that kind of coincides with some other policies that have been put in place for, like, if you are here for a certain amount of time, the Trump administration may want them to report certain things even if they are just traveling. And so there are a lot of different things going on where it looks like the United States is maybe not as inviting for tourists right now as they were in the past administration. And so we're kind of waiting to see if that gets ironed out or not, or how the sentiment plays out. You know, maybe next year everything's kind of getting back to normal. It's just a lot of the tariff stuff, a lot of the immigration stuff right now makes this a little murky. So if the international travel to the United States keeps going down, then that could be an issue for ride-sharing services like Uber and Lyft, because of course that does affect how tourists typically get around the country. This is also how a lot of US tourists get around when they go to other countries, is they will get Uber or Lyft because it's available in many different parts of the world. As I mentioned, thousands of different cities. So this could affect Uber stock, but overall, it'll probably have more of a positive impact from attracting new Uber drivers, maybe even leading to more promos, as they mentioned on CNBC, because of them keeping more money from tips and not having to pay taxes on that. You'll attract more drivers, and maybe Uber, which is actually kind of known for doing different promos, especially with things like Uber Eats, they could have more promos that help you get more deals and attract more customers, because they know that their drivers will be keeping more of their money now. So Uber is actually, again, they're up very well year to date, up 0.36% today, despite the market in general kind of being down the last couple of days. So Uber stock, like, let's say you looked at the last 5 days when a lot of this, the new tariff stuff, or I guess the tariff stuff that was announced months ago before the July deadline, that got kind of put on hold, is now coming back into play if there are no new deals by August 1st. Well, that news, of course, led to the Dow Jones, the market in general, S&P 500, all of that taking a noticeable dip the last couple of days, even though maybe not too bad over the past 5 days. But again, a noticeable dip, which we'll see how that plays out depending on how some of these tariff deals go. But Uber has been completely fine during all of that. They're up 4.86% in the last 5 days. Again, over the past year and year to date, doing really well. Last 5 years, up 193%. We got some great news. PE ratio is pretty low by most standards. That's a really good PE ratio, under 20, 16.9, especially for a tech company. The dividend yield is non-existent, unfortunately, but if you are buying Uber, you're more focused on growth in general, as you would be with many of the major tech stocks. Year over year quarterly financials look amazing. If you look at revenue, net income, diluted EPS, and net profit margin, many of which up over 300%. Now, they did beat EPS in March 2025 by 52.33%. They did miss on revenue by 0.74%. Price to book is 9.2, which isn't super high compared to some other tech companies. It's not super low either, but generally they look like they're doing really well as far as their balance sheet and revenue. Hedge funds seem to be bullish on Uber as well. And we also have some insiders buying more Uber despite missing on revenue. We have people buying Uber quite a bit in Q1 as well as going into Q2. Both hedge funds and insiders seem to be pretty bullish on Uber right now. And then as far as analyst ratings, out of 57 ratings, a 79% buy score and only a 21% hold score. 0% are recommending selling Uber right now. So we do have an article from Bazinga, if you want to look that up, talking about Uber could keep climbing thanks to tax breaks, which we already covered, AV partnerships, which we'll get to a little bit in a second. I did cover that in the last video about Uber, but strong bookings as well. So again, we'll see if tourism affects them that much or not, but lots of really good sentiment around Uber, other than maybe, again, the unionization in Canada, which may not even really be a bad thing necessarily. There are a lot of the stuff they're asking for is just transparency. But if you look at, say, the tax breaks in the US, obviously very bullish. And if you look at some of their partnerships with, say, companies like Waymo, that could be very good as well. So we have some more coming from investors.com talking about how analysts think that the ride-hail leader could benefit from Trump's tax bill. Again, basically saying that they're not going to tax people on tips, which is a big part of your earnings on Uber. And then you have some more Wall Street analysts talking about this as well on Investopedia.com. Like, this news is going everywhere. So once a lot of people start seeing this news, there's a good chance there will be more people buying Uber in the coming days because of all of this news. Again, not financial advice, just kind of a lot of times good news equals more people buying. Some other things I like about Uber, you may have seen me mention before. I like that they have a pretty high employee score. 3.8 out of 5 stars is typically a pretty good score. Anything close to around 4 stars. 68% would recommend working here to a friend. It's not too bad at all. It's pretty close to 75%, so almost 3/4 of employees recommend working here, and about 3/4 also approve of their CEO. Obviously, you need to have somebody who is knowledgeable and knows what they're doing, who's calling the shots. Their PEG ratio, another indicator of whether or not something is overpriced. Again, you also have the PE ratio, which we already went over, is quite low and quite reasonable, which indicates that possibly this is a great price to buy Uber at right now. Well, if you look at the PEG ratio, forecast 12-month forward PEG ratio according to NASDAQ.com is 1.23, which typically anything around 1 is a fair price. Over 1 is typically a little overpriced, and under 1 is underpriced. But obviously, those are just kind of generalized numbers. I don't necessarily look for something to always be under 1 to think that they're a good buy right now. It's more of just the consensus among all of these different indicators. But really, compared to a lot of other companies right now, that's quite a low PEG ratio. Now, if you look at some of their other things, we're talking about Waymo and Uber's partnership with them. Waymo seems to still be in the lead for autonomous driving services and self-driving vehicles. And basically they partnered, instead of making a competing app, which I was worried about for Uber for a long time. Another reason I wanted to pounce on Uber when I found out they're partnering together instead of being competitors is Uber stopped making their own fleet of cars and decided to partner with Waymo. Waymo decided not to make their own ride-hailing service app and instead partnered with Uber. So they took the best of both, some of the best self-driving cars according to most reports right now. They seem to be in the lead in terms of testing, safety, things like that. And they are owned by Alphabet, which owns Google, of course, and obviously unlimited resources to put into Waymo. Well, Uber already has the user base. So they are actually allowing people to use this in Atlanta and Austin, Texas right now. So people are actually able to use this, and it's only going to become a service that's available in more and more different cities around the US and could actually save money for people who use these services. And also you have the people who are actual human drivers earning more because they're not having to actually pay taxes on their tips right now. So all in all, I think mostly you see a few things that could have been concerns for Uber. For the most part, not much of a dip coming from the reports of unionization in Canada, as well as possibly the downturn in US tourism, but the uptick could increase massively over the next few years, especially during this administration, if the lack of taxes on tips really attracts more drivers, maybe converts to more Uber and Uber Eats promos, which is great for customers and leads to more people ordering Uber services, maybe even giving them more of a leg up on DoorDash. But of course, DoorDash drivers will also benefit from this as well. But again, Uber had a great year going into this year already before this was really even coming into play, before this bill even got passed.